Hello everyone. Microsoft Excel has unmatched functionality to develop sophisticated analysis to plan, manage, and control accounts receivable to achieve optimal results with minimum resources and investment. I always advocate that Microsoft Excel is one of the best tools available. So today is the second session of our three-part series, Boost Your Account Receivable Reporting and Analytics by using Microsoft Excel. Today I hope to consider mainly the risk part of reporting and analysis in our session. So I've divided our sessions around following four major areas. Firstly, I'm going to describe the sophisticated reporting objects with predictive capability. Secondly, credit risk portfolio metrics to enhance credit assessments. Thirdly, automation of monthly credit management reporting. And then I'll move on to automation of email response using Excel decision tables. Let's take a closer look at components of reporting objects taking credit management into consideration. Advanced bucket analysis examines nature or receivable and align next steps in age analysis. DSO calculation examines trend in age analysis. Customer payment trends identify key trends when customers pay. And forecasting methods, we explore some of the rich functionalities in Excel that allow for advanced forecasting. Advanced bucket analysis. This examines trends in age analysis. A group of invoices with similar or identical receivable. An investment strategy called the bucket approach developed by Nobel Prize winner James Tobin recommends dividing investments into high risk and low risk buckets and then trying to achieve the highest possible return for each bucket. Similar is applicable for receivable management. So I'll take you to Microsoft Excel and I'll show you how this works. So I'll simply open my data file. Okay. So for example, this is my data file where I have different categories for receivables. So first of all, I will tell you how you can bucket your receivables with subtotals. So the rule for the subtotals, the first and basic rule is that make sure that the category or the column that you want to make subtotals on should be sorted. So for example, I make it sorted now. The reason is that the moment you will find a change in each category, at that spot, Microsoft Excel will make a subtotal and it can screw up everything if you are making um, a subtotal without sorting. So first step, you have to go to data, and in the data you see down there, it's subtotals. Click on the subtotal and Excel will start speaking to you. Now, what is Excel saying? Excel is saying at each change in field. So which field do you want to change? I mean, to mark the change. So for that, we have category. So I will check category at the very end. So what should it do? Sum. Which field should it sum? So I'll say it should be invoice value. So each change in category will sum up invoice values and we'll have a subtotal. Now I will put a OK here. Now everything is summed up. So when I click on 3, you see it's full. 1 is nowhere. And now I open this and I see we have subtotal. Okay, I'll go back to the subtotals and I see which category, customer name. So we were supposed to have category here. So now if I go there, now we have the correct one. So for example, if I have this Excel sheet with me where I have multiple information stored in the database. So I want to make a subtotal bucket analysis here. So that will need, first of all, the field where we want to perform that analysis should be sorted. So if I want to make an analysis of categories, so for that reason, I'll have to have this sorted. So the first thing I have to do is I have to go on the top and sort it with the filters. Now it is sorted. So under it's sorted already, then you go to data, and in the data you find these subtotals. Click on the subtotals, and the subtotal menu is here, or pop-up, which is speaking to us. What does it say? Each change in. So at each change in field, for example, category now, so each change in category will make a sum, use function sum, where? Now, invoice value. So each category change should sum invoices, and then we should see the subtotal. There we go. We are ready now. Click on 2 and you will see these summaries. Now, whenever you want to see the detail, click on the summary and you'll find the invoices list. Now, this is ready with us. Now we want to further um, make an action tracker on this, for example. So first of all, I will put on over here follow up and owner. Definitely there must be an action owner for each action. Next action, there must be defined next action as well, and closing date. So there we go with the closing date as well. So follow-up, next follow-up, when are we expecting next follow-up? So let's say I want to set up this date for the next follow-up, and let's say this date is for all the actions. There must be an owner as well. So for example, I'll propose an owner, in this case, Ane, Ima, Soliman, Ali, and Qureshi. So these are multiple people who have actions here. What is the next action? So next action is, for example, in the case of bank, we'll go to bank for payment. In the next case, we have budget issues, so customer meeting. And then we have finance issues and finance weekly meeting. So that's the next step, next action. Technical issues, technical verification. And treasury issues is treasury meeting. So these are some actions that we have pulled in here. Then we are supposed to have some dates for the closing as well, which we'll propose. So for example, the next proposed date is 30 days after the follow-up start. So we'll add this date plus 30. So you see it has automatically pulled it in. So for example, if you change the follow-up or startup date, then definitely it will also change the date of closing here. So this is sort of a small tracker that you can use on the different buckets here. So whenever if you want to open the bucket, you can see that line item level detail containing each value here, plus the actions that are planned for these particular categories. So this is one category bucketing, I'll say, for data available. Now we'll go to the second data available. Now the best thing is that you can do is now you have a total. For example, number of line items are 2,985 and the value is 51 million. So you want to focus on it. So what I'll suggest is make a top 10 or top 20 analysis. So if for example, if I take the top um, 20 out of it, so these are 32 million, a big value is only in the 20 invoices. So you should focus first on these 20 invoices, get them cleared. And I think rather than pulling in effort in these 3,000 almost invoices, you can only focus on these big value items first, collect the big ticket items, and then you can move on to your actions on the smaller value invoices. So that's one of the bucketing to make top 20, top 10, top 5 analysis. And then the next one is the pivoting. So I'll simply show you how you can make a pivot out of it. So simply go to insert. In the insert, you have pivots. Select the pivots. I've selected the pivots. Now what I'll do is I will take the categories of the row. I will put days overdue. So days overdue will be in the categories of row, which is quite strange. It shouldn't be here. So I will take this to column rather. Good. Now I will take purchase order numbers. We have POs here. Perfect. Now I'll take invoice values. There you go. So invoice values will be summed up here for each purchase order. And I don't see any values. Oh, okay. We have them here at the very end, most of them. So what I want to do is I want to club these agings and make brackets of these aging. So what I'll do is I will simply click on one of the days overdues, go to group. Now it's asking me how to group it. Do you want to group all of them? I say yes. What is group by? Group by means what should be the gap. So 0 to 100. In this case, it will be 0 to 100. So I want to make it, for example, 0 to 30. So I'll make it like this. Now we have 0 to 30 range. And I can see there are some values here. Yes. I would rather make this like this. I'll remove the PO numbers. So yeah, so we have receivable here with the category. You can see 0 to 30, 30 to 60, and so on and so forth. So you can see all of the receivable here, and now you can focus on the categories. For example, if I talk about which category requires more focuses, I'll say this one, because number one, we have a big number here. And number two, this is more than a year, so this needs more focus. So by this, you can also make bracketing, and you can analyze by bucketing the brackets of age, and your receivable can be fitting in there. So this example was from Microsoft Excel pivot tables. So now I'll move on to next topic, and the next topic is DSO calculations. What are DSOs? DSOs are days sales overdue, examining the trend of the analysis, age analysis. What is the days outstanding sales? It's a measure of average number of days that a company takes to collect revenue after a sale has been recognized or made. For example, suppose that we had some monthly sale in this July month, and there was some collection as well. So there is a certain account receivable on the account. So on the basis of that, we'll calculate that. So I will show you a quick example here where we can see how this DSO can be calculated. So for example, I have this Excel sheet which contains the sales data for period 7. So this sales data, if I sum it up, this is total 500K. And if I take a sum of the total account receivable, so that is 350K dollars. So now I will apply a formula here. So I will bring in the number from there as well, that is AR, like this. So we have here total sales, total AR, both of them. I will simply paste values so that it looks the same. Now we'll apply the formula. So the formula is equal to, and I will take, the first thing is we'll take sales, AR, then we'll divide it by sales. So once it's divided, then we have to make sure that we escape. I'll put all of it in brackets because it should be in brackets because we have to multiply it with 31. So there I multiply it and it's 21.7. So you divide your AR by sales and then multiply it by the number of days. For example, in July we had 31 days. With the DSO of 21.7, company has a very short average turnover or turnaround in converting its receivable into cash. Generally speaking, a DSO under 45 is considered low. However, what qualifies as a high or low DSO may often vary depending on business types. There's another thing called PARD, PARD, Project Asset Rotation Days. We'll definitely talk about that in our next session, the third and final session of this series. So now I'll move back from this file back to our PowerPoint presentation. So the next part is customer payment trends, identifying key trends when customer pays. Trend analysis is practice of collecting information and attempting to spot a pattern or a trend in the information. In some fields of study, the term trend analysis has more formally defined meanings. Trend analysis is basically used to review historic data and predict future events, short terms, long terms, and intermediate. So what I'm going to show you now is I will take you to, again, back to my Excels. And in the Excel, I have a certain trend of payments coming in, collections. I want to forecast on these, on the basis of these collections happening in the last few months. I want to forecast uh, trend, payment trend for the next 2 months. So for that reason, we have an Excel function called trend. So I will write it down, is equal to trend. So trend formula asks us to give it known ys. So in this case, known ys is all the collections that have been made in the last 10 months, comma, then it's asked for known xs. So known xs is all the periods where we had these collections. And then it asks for new xs, which are the 2 new months. The moment you will enter, it will predict the cash flow for the next month or the collections for the next month. I'll copy the same formula and I will edit this formula now because it's not on the same place where it should be. So I'll pull it up a little bit and I'll pull this up, sorry, pull this bar as well a little bit up. Perfect. There we go. Now it's 104, and the reason is that we don't have correct numbers here. So I will forecast only A13 rather, and I will pull these numbers down because we have to see the cash coming in for the last month as well. Now this is the correct number, 111. So using this trend feature, we can, or a function, we can analyze the historical data, and on the basis of that, we can predict our future as well, what is expected in the next 2 months. So this is one of the features for trend analysis to analyze customer uh, trends. And at the same time, we also have forecasting methods where we explore some of the rich functionalities in Excel that allows advanced forecasting. Now, this forecasting is a little bit challenging, or I'll say a little bit different from what we had before. I will show you how it is different from the one we had before. So for example, we have here not only the collection, but the sales. So now we have to, for example, calculate the collection. So as per the contract, we make a sale of, for example, $20. So in that particular month, we'll not get all of that $20 in cash. Rather, we'll get only 90% of that $20. So I multiply by that 90%, and I take 90% value here. Now I have 90%. Next month, I will get the remaining 10% from this, and of course 90% of this. So I will change the formula pattern now a little bit. So the formula here says is equal to, now I'll close the bracket, and after that I will say B3 multiply by 90%. So this is what I will get in this month, correct? And I will also get plus, I will also get the 10% that was missing from last month. I'll have to enter minus this one. So it was B2 minus C2. I close it. Now the same formula will carry on till, let's say, for example, till P10. So now this is the collections that we are expecting in our these months on basis of the sales that we have been getting. So on this basis, now we want to forecast the future. But in this case, we don't have cash, rather we have sale, and it's uniform. So sale is our focus. So I'll say is equal to forecast. Now it's asking for X. So X in this case is the month that I want to forecast. Then it's asked for known YS. The known YS in this case is sales that we have been getting. There we go. And finally, it asks for known XS, which is definitely the periods that were considered in this sale. So there we go. We have 104 here. I will enter here and I will see the formula is correct. Of course it is not. So I'll move it back a little bit where it should be. Oops. I'll pull this one back up here as well. This comes down. This comes down. Perfect. Now it's perfect. So we have 94 cash coming in P12. So this is something you can use forecasting method to see or predict what is the future cash coming in based on the sales that we had. So after the forecasting, I will give you a break, and in the break, what we're going to do is we're going to see a very useful handy feature, a key that is F5 key. F5 key is one of very handy keys, I must say, that you use in your Excel. So I will quickly share one example from F5 key here. So first thing that I would like to share is that F5 key is utility. For example, if you press F5, you see go to and reference. So in reference, if you put A15, it will take you directly to that cell. So you don't have to scroll. For example, I will give one more sample here. So if I want to go to F300, only one click and I'm there. F5, press and enter, I'll go back up on the cells. So that is one of the features that makes us very fast to navigate across the spreadsheet. Now there's another thing. For example, if we have a formula here and the formula says that um, there is a reference and the reference from another sheet. So for that, what I do is control and bracket start. So whenever you press control and bracket start, you reach onto the place from where this formula is fetching the numbers. So if you press F5 and press enter, it will take back to the cell which is being audited. So again, control bracket open, and then you reach on the place where the formula is coming from, press F5 and enter, you'll be back on this cell which is being audited. So that is very fast and very quick to go. Now we have often hard-coded numbers in Excels, and what happens is when we share those Excel sheets, we forget to copy-paste values, the formulas, and when they reach to the destination, or if we receive some of the Excels from some friends or colleagues, then we don't have those formulas working because references are not there. So what I suggest is that before sharing that field or that Excel spreadsheet, you should make sure that there is no such thing called formula there so that it's easy for the people to handle it. For that reason, what I'll suggest is press F5 key. For example, here we have multiple hard-coded and formula and references. So we want to make sure that we highlight these cells where we have no formula so that we can identify where we have formulas. So press F5 and then go to special. When you go to special, there's constants, and the constant, remove everything, just keep the numbers and OK. Now, when you press OK, all the numbers which are hard-coded numbers are highlighted. So for example, if I color these to blue, so in this case, now all the blues are the hard-coded numbers, you see, and whichever is black, it's reference. So whichever number is black that has a reference, it's coming with a reference. So that's how you can identify, point them out, and highlight them before you share with your colleagues. So that these were a few tips, guys. Now let's move back to our main topic, our main agenda. So moving on now to establishment of credit decisions on credit granting. In this session, we'll explore how to rate customers using advanced features in Excel. So credit analysis basically is the method by which one calculates the credit worthiness of a business or an organization. In other words, it is evaluation of an ability of a company to honor its financial obligations. So now what we'll do is we move down to the Excels that we have. So the next Excel we have is credit metrics analysis. There you go. There we have. Now we have our beloved Excel file here. So what do we see here is, so oh, okay, now it's working perfect. So what I'll do is now I'll make a pivot here, and pivot will contain, let me take the pivot first. So I'll have in the rows first, I'll pull the customer name. We have all the customers here. Then I also pull in the customer country because that's also very important. Now you see the countries coming down under this. So just simply right click on the pivot table options, display. Make it classic pivot layout. Press OK. Now the countries are in front. That helps us. I'll make it a little bigger. Now after that, I will put invoice value to values. So now we have invoice value for each one of these. And now I'll put due date in the columns as well. Due uh, date. That's 1 second. Due date. Yeah, this is the due date in the column. So we have yearly due dates. That's perfect. You can also change it with grouping. So if you go to grouping, we have over here monthly, quarterly. I'll keep it to years. So we have years only. Then after the yearly grouping, now I want to make bucket here, bucket analysis. So in the bucket analysis, what I'll do is I'll pull in a formula that says that in case of, I'll add one more column here. So yeah, okay. Now it says that in a case different values are representing different categories or buckets. So how we can make it. So it's still, I'll say this two columns here, remove these rows so that it's quite in the shape. Now I'll pull in the formula. You can see the formula when I pull it here and I press enter. Now it shows me that it's in a certain category. So I will show the formula that I drafted. The formula is that G3 is greater than 1 million, that it's 1 million plus. If it is greater than 500K, it's 500 to 1 million. If it's 25K, 250K rather, it's 250 to 500K. And if it's 100,000 plus, it should show this category and so on and so forth. So according to the values, it's showing us some categories, and in the categories, what we have got is all the categories are here. So now we have a bucket of a category of what is overdue from these customers. Now what I want to see is I want to see a country rating here. So for that reason, I will pull in a Power Query, and the Power Query will help me to get this rating of these countries online. So the first thing I'll do is I'll go to data. In the data, I'll go to new query, and new query, I'll go to, there are multiple sources. From other sources, I will go to web. So the moment you click on the web and the URL, you can pull any address from where you can pull in the rating for these countries. For example, if I had this tradingeconomics.com link, so I will fetch data from there. Now Power Query is fetching data from the table in the internet, and in a few seconds we'll definitely have that in front of us. There we go. The first table I see is containing this data that I need, so I will say load this data. So it will pull in all the data in another sheet, in sheet 2. I'll go back to sheet 1, and from there I will VLOOK it up, rating. Oops, there was an upload, so we'll go back. So rating is here, so what I'll do is equal to VLOOKUP country name. Now take a rating, for example, S&P. You can see the ratings are being fetched, and ratings are quite up to date. So for example, if we have a change in the rating, it will automatically be updated by the table by a simple refresh button. So it will go automatically to internet and fetch data from that particular table. So you can see in the background it's pulling in the data. So this is up to date data. So now on the basis of this rating for each country versus the overdue bucket analysis, now you can, oops, it's pulling in all the data. So now you can analyze which country, which company in which country deserves what kind of treatment from the receivable management point of view, and how you should manage and handle it. So that was one part of it. Let's move on to automatic email responses using Excel decision tables. Now we'll explore the powerful features of developing automatic text responses that can be sent to your clients using Microsoft Excel, concatenate functionality, and email through Outlook. So for that reason, we'll also use here decision tables. So I would rather take you to the decisions tables directly. So for that reason, I have, for example, if I have some customer data that I'm going to show you, this is sample data that I have where I have customer name, contact, email ID, document, invoice number, payable amount, and of course, the reporting currency. So now I want to build a decision table based on this, but the decision table, what I want to pull in is that there should be a certain limit of the data that I can send emails to. So I don't want to send email reminder to each one of these customers, but I want to send it to only the people or the customers who owe me more than 100K. So what I'll do is I'll go to data, and in the data you have new query. You remember we went to this source and web, but this time we'll go for another source that is from a file, a workbook. So I'll click on the workbook, and simply I'll go back to that Excel sheet that I've just shown you where we have this data um, available. So I'll simply go to that file. It is pulling in the tables from there. So this is the OD table that contains the fields that I was talking about. Rather than saying load it, I will go to edit because I need to pull in the decision factor here, which will be that 100K number. So I don't want to see the number people who owe me less than 100K because I don't want to send them a reminder at the moment. So I'll say people who are greater than or payable amount is greater than 100K. So I'll put in 100K, press the K, and I have a certain list of customers. That is cool. I'll load it. So cool and load it. I'll close this file, save it. Now I have a decision table ready. So for this reason now I have to move to the next part, that is automating the credit reports. And for that reason, I will use Microsoft Word. That is quite handy. So now we'll explore the powerful feature of Microsoft Word that remains the best medium in developing sophisticated reports. So we'll explore the reporting object developed in Excel, and then how best these are reported on further. So we'll explore that powerful features by developing automatic text responses to the people through this particular feature. So now we'll use mail merge here. I will enable the content. So what is mail merge? Basically, no doubt that is one of the most powerful automations available in Office products. Mail merge is a process to create personalized letters and emails from a form and document which contain fixed text, which means that these will be same in each document, but also variables which act as placeholders that are placed in the text from certain data source. So what we will do is we will start it now, and in Microsoft Word we have this mailing on your ribbon. So go to mailing, and in the mailing there is start mail merge. So first thing I have to do is I have to go for the mail messages. So I'll click on the mail messages, and now I'm ready. But ready means that I'm ready with the drafting place. So I need to get here recipients. So I will select and use an existing list. So for that reason, I need to bring in the data from the database. Again, I'll go back to my file, which was interestingly now not the customer data, but I'll take decision table because this contains correct data. So I tell it that I will need it from query. So I have here, okay, in the query, we don't have anything. So I'll go back. I will take another click on the files, and I'll see which tab that is containing that particular. So it's sheet 1 and sheet 1 external data. So I'll select sheet 1. Now I have 1, 2, 3, 4, 5 data. So 5 means these are the 5 people who owe us more than 100K. So now we have the correct data in. I will simply now start drafting the email. So I will draft it with to the company, and the company is which company. I will add from insert merge field. So I will add from here customer name. So to that particular company. Then I will write down dear Mr. And now I will pull in the name of that person. So the name of that person is another field that is contacts, if you remember. Dear Mr. And I will pull in the name with the reference. Sorry, it's all caps with reference to my invoice number. Now I need to pull in the invoice number, so I'll go to insert my field invoice number. This is dynamic field, by the way. Worth, sorry, worth. Um, I'll take the payable amount now. And of course, right after this payable amount, I need to pull in the currency as well. This much submitted on. Now I'll put the document number here. No, sorry, document date when it was submitted. I would like to remind you that payment is due for this invoice. Hence, I would appreciate if you could confirm the payment date. That's it. I would like to thank you. Best regards, vendor 3. So this is just a sample here. Now we are ready with the mail merge. So the only thing now you have to do is to finish the mail merge. Now, when you finish, it's asking you either want to send individual documents, means you want to print them out, print documents, or you want to send emails. Of course, I want to send emails. I will take the contacts from, if you remember, we had this email IDs. So to these email IDs, subject is payment reminder. And then simply I will pull in HTML format. You can choose your own choice format as well. So what I want to do is I want to send an email to only the current record because this is my email ID. Other than that, if I want to send all of them, you can send thousands of emails in simple one go. So I'll select yes, and then I could see that there's an email going out. Now I have to open my Outlook to enable it to send out this email because at the moment my Outlook is not open. So I will simply send it out. Okay, Outlook has sent out that email. In the meanwhile, I'll open my Gmail account just to show you if email arrives or not. So there you go. The email just arrived, payment reminder. I click on it and there you see, dear Mr. Solomon Qureshi, this is to the company name with reference to invoice number this, worth this much euros, submitted on this date. I would like to remind you that payment is due. So this and messages like these can easily be shoot out in a second time just with the help of this mail merge. So this was the handy feature of mail merge to show you how it works. That was it today, folks. I hope you enjoyed throughout the session and hopefully looking forward for you to for the next session. But before we jump on, I would like to share with you what we are expecting in the next session and what you should expect in the next session. So in the next session, part 3, we'll have development of wide-ranging credit management dashboards using Microsoft Excel. So just hang around and look forward for this session because it's going to be quite interesting. Um, what I'm going to share with you in these sessions is number one, dashboard design and object selection, dashboard like decision support systems in Excel, development of an optimal credit management policy, credit analysis as well. And of course, as I mentioned, we missed one part today, PARD, project rotation days. That I'm gonna pull in the next session. So guys, looking forward to speak to you in the next session. Have a good rest of the day. Talk to you then. Thank you very much. Bye bye.